So welcome to Everything Marketplaces, where we talk with marketplace founders and leaders from some of today's top marketplaces. So I like to occasionally change it up and bring on some younger founders with incredible stories that are building marketplaces on the forefronts of industries and markets, which is the case with our guest for episode 28 today. So with that, I'm super excited to welcome on Anthony Zhang, who is currently the co-founder of Vinovest. So prior to Vinovest, Anthony was a Thiel Fellow and started EnvoyNow, which was the last mile delivery platform for college campuses that was acquired. So with Vinovest, he's now building a platform for investing in wine as an alternative asset. So I'm super excited to dive into marketplaces with Anthony and learn more about it. So Anthony, welcome to the group chat. And let's maybe start off by you sharing more on your background for those that might not know you and what first led you to start building marketplaces and then now Vinovest.
Sure, absolutely. And thanks for inviting me. So in terms of my background, I've been a previous founder before, and that first business, EnvoyNow, was a food delivery marketplace. So much like your DoorDashes and Postmates of the world, when I was a freshman in college, I decided to do the same thing, but focused on college networks. And that was something that really was starting just as a dorm room side hustle, just a way to make some more money running food from Chipotle to the library, for example. And had a really lucky break when I was a freshman where I had the opportunity to pitch Mark Cuban my idea, and he liked it enough that he made me an investment offer. And I think that was the night where it made me realize that having someone like that believe in my idea and believe in what I was doing gave me the confidence to really pursue it full time.
Awesome, and yeah, that's quite the quite the story right there. So what were kind of like the next steps then?
For us, I think first thing was dropping out of college. So did that. Sorry, mom and dad. And for us, we knew that we had a ton of demand from other college campuses and that we couldn't really compete with the DoorDashes and Postmates of the world from just a pure funding and marketing perspective. So we chose to really focus on tier 2 and tier 3 markets where there were still these large college towns, whether it be like Ann Arbor, Michigan, or like Tuscaloosa, Alabama, or Gainesville, Florida, where there were still large enough markets for us to make our business model make sense, but we were really the only game in town. And that really helped us be able to still grow really, really aggressively while being able to expand our operations in a way that was cash flow positive.
Awesome. And so could you maybe share a little bit more about the different stages of EnvoyNow and then maybe kind of like the outcome on that?
Sure. Yeah. So with EnvoyNow, we were able to raise a couple rounds of funding. We eventually grew over the course of, say, almost 4 years from just one campus when we started at USC to 23 campuses nationwide. We had over 200,000 students using our app, and we were able to get a pretty good exit and got acquired by a company called Joyrun. They're now part of Walmart now. So yeah, it was a really crazy journey. Food delivery is not an easy business because it's very operationally intensive, but I was lucky enough to learn a lot along the way and also get a good exit.
Nice, nice. And then also you were a Thiel Fellow, is that correct?
Yeah, so part of the reason I was able to drop out of college was I got the Thiel Fellowship, which gave me $100,000 to essentially be able to drop out of school.
Nice, nice. So yeah, so what was that like? I mean, we have a lot of like, I would say younger kind of, founders in the group that are looking to start their first kind of marketplace or are currently. So what were maybe some of the, maybe kind of lessons that you learned as a young kind of CEO with your first kind of company and marketplace?
I think in terms of, being able to not know anything and still come into it with a learning mentality, I think that was really, really huge. We joined an accelerator program, so we went through 500 startups, and that was really key in terms of having me being a college freshman dropout at the time, really not knowing anything about the world, being able to still have that student's mentality and learn from a lot of people who, were longest in the same batch or same cohort. They'd had actual experience, maybe they'd founded companies in the past, and also was really seeking out mentors and advisors who had been really, really generous with their time.
Nice, nice. And then, so after, so after EnvoyNow, so after you had that exit, did you immediately kind of jump into Vinovest, or what was the kind of like, what led you to start Vinovest?
I think the initial seeds for Vinovest started very, very soon after that exit because, finally had some money. So was interested in investing, didn't want to put it all into just stocks and bonds. So was really exploring that alternative asset landscape. So, was doing some angel investing, was investing in some crypto. And I think the whole reason I got into wine investing was just because of one article in the Wall Street Journal. And it was talking about how fine wine had been consistently outperforming the S&P 500 over the past 30, 40 years. And I was like, holy crap, that's really, really cool. I always knew that, some of these wine bottles, as you age them, they get more valuable, more expensive, but it never really clicked to me that it could actually become something that's investable. And that really led to me ultimately founding Vinovest, which is a platform that makes it really easy for anybody to invest in fine wine. So we take care of which wines you should buy, we manage your wines for you, we store it for you, and we also give you access to a platform that provides liquidity to other buyers and sellers.
Awesome, awesome. And then what year was that, just so we can kind of get a reference on the time?
This was just late last year, so the company is around a year old.
Oh, nice, nice, nice. And then, so what were like the first steps, when you were exploring this and then understood the problem and, started the company?
I think the main exploration was for me as a wine investor. I saw that the supply and the demand was really, really fragmented. There really isn't any sort of like, kind of like stock exchange equivalent for the wine market where I could be able to see all of the buyers and sellers, see all of the investment worthy wines, see, price charts even to look at what the trends were in the market. It was something that was extremely, extremely opaque. I would often find myself scraping 50, 60 different websites and comparing prices. See people on Facebook groups, see people on WhatsApp channels trying to barter and buy and sell. And for a multi-billion-dollar category like fine wine, it was kind of ridiculous that there wasn't any sort of unified platform. So, seeing that demand already happen organically in all of these other channels that were pretty, I think, pretty unscalable, really gave me a lot of confidence in being able to just even connect the dots and make it better for existing players, much less to create an easy platform to let millions of other people into this market that previously were not able to access it.
Yeah, yeah. And then do you have co-founders, and did you recruit a team and raise capital early, or?
Yeah, so I was lucky to start this with a co-founder. So prior to starting Vinovest, I'd worked for a couple of years at a cryptocurrency portfolio management company called Blockfolio. So along there, I met my now co-founder Brent. So he's an awesome entrepreneur as well. Used to be design director at TikTok. Had a couple of companies acquired as well in the past. And we both just loved wine. So this was just a hobby that we were doing on the side. And, just being in the crypto world, you meet all sorts of crazy people who are interested in investing in anything. So that was really how the fuel for actually thinking that wine investing could be a real thing happened. So we quit our jobs, was able to raise some funding early this year, and we've been off to the races since.
Nice, nice. And then, so what was kind of like the start, from like a marketplace kind of side? Did you have kind of, built up demand with investors, or, did you kind of start with like the supply side, or could you maybe share a little bit more on that?
Yeah, so I thought it was really important to have the supply side down because, especially in a platform where we're talking about investment grade wines, we needed the best wines. We needed access to the best wines that are actually worth investing in, so that could be the draw for the demand. So thankfully, through the past few years, just investing in wine on the side, was able to build up some relationships and basically was able to go to those folks and those platforms and be like, hey, like this is what we want to start. Would you be willing to work with us if we built this? And another part was kind of just bootstrapping that supply. As I mentioned, the market is very, very fragmented. So we were just scraping listings from other websites too to be able to help us provide more supply, so that when we launched on day one, when we got our first customer, there were thousands of different wines and decades worth of price appreciation data for them to access, and it was a good experience for the first customer.
Awesome. Yeah, thanks for sharing more on that. So maybe if you can describe a little bit more about the or maybe just what Vinovest is and who is it for?
Yeah, so Vinovest is the platform to invest in wine. We make it pretty easy. So we give you all of the tools that you need to be able to build a fine wine portfolio. You don't need to know anything about wine. We just ask you simple financial questions like how long is your investment timeline, or are you more on the aggressive side or more on the conservative side, or how much do you want to invest? And based on that, we have an algorithm that can then automatically select you a wine portfolio. We'll then store the wines for you. We'll then help you monitor and track it and help you sell it when the time is right. So this product is really not for a wine enthusiast, so to say. It's really for any sort of like retail investor who understands the importance of not just putting all your eggs in the stock market and wants to diversify into something interesting, something that they may not have known was so high performing. And that's really what we've seen this year, especially with the volatility in the stock market.
Awesome. And is there a certain, do you have like a certain kind of like, user persona when it comes to the investor that you're kind of going after right now, or?
Yeah, I'd say it's definitely someone who has a good grasp over the basic stock market. So they know the stocks and bonds. This is not like someone's first investment, nor would I recommend anyone's first investment be in wine. You should definitely play with the more traditional assets first. But for folks who maybe are thinking about some real estate or gold or crypto, or that sort of that allocation into the, say 10 to 25% of your portfolio into alternative assets, wine can be a good option for them if that's something that they choose.
Nice. Yeah, I actually kind of went through the, was checking out your site and kind of went through the process, and it was interesting. I definitely enjoy wine myself, but don't know that much about it, to kind of manage an investment myself. So cool. So then, so I'm kind of curious as of, right now, with just the increase in popularity of kind of alternative assets, have you seen, more recently, a drastic kind of increase in interest from the investor side, for maybe like a younger demographic, or?
Yeah, we've definitely seen that just all year. So our company, we launched really publicly in, I'd say, early March.
Mm-hmm.
And that was really when the pandemic hit. People were drinking more wine, and I think just thinking about their investments a little bit more. I think all investment platforms have seen some tailwinds this year, and we've definitely seen that. I think people, when you have a 10-year bull run, it's easy to just be passive and just sit in the S&P. But now that I think a lot of smart investors are realizing that we're closer to the top of the market cycle than the bottom, it's time to take some profits off, be able to diversify and hedge a little bit. So that's why I think alternative assets have become such a popular thing for everyday investors.
Yeah, for sure. And then, so as far as, I would say like a liquidity kind of timeline, what do you typically kind of, I would say, what do you guys typically kind of message when it comes to that, or suggest?
Usually, if people want to get in or get out of the wine market, usually takes a couple weeks.
Right.
Main lag for that is just because we're dealing with physical bottles of wine here, so the shipping and things may take a little time.
Mhm. So I guess on that note, that's a great kind of segue into speaking about the actual investment. So when say for instance I invest through Vinovest and kind of have a portfolio, do you guys actually physically kind of handle the custody of the wine, and then can I access it, or can you maybe share a little bit more about that?
Yeah, so the cool thing is you fully own those wines. It's not like you're buying like a part of the wine fund or
Mhm.
a share or something like that. So you actually will own, say, 6 bottles from Bordeaux or 3 bottles from Burgundy, a case of Napa or something like that. And that'll kind of be like your diversification. And we've also structured it so that you actually fully own those bottles of wine. So say if tomorrow Vinovest was gone, what do you have, right? You actually have those physical assets, which I think having direct ownership over the tangible underlying asset is a big advantage when people are considering alternative assets. That's why I think gold has been so big for folks this year. Even though most people can't access that gold, they like the feeling that they're owning something that has real world value.
Yeah, yeah, for sure. So I can basically request, say for instance, if I own, a certain kind of a case of wine, I can request that and Vinovest ships it to me, or
Yeah, you can drink your investment if you want. So
that's
at the
that's
end,
exactly, yeah, I was gonna ask about that.
it could be you if you want that.
Yeah, yeah. Nice, nice. So what are some of the biggest challenges that you're facing right now?
I think for us, it's really about education.
Hmm.
You know, like me and like I'm pretty sure everyone in this room, I didn't know that wine was a good investment until I researched it, and I didn't know where to start. And I think that is exactly I think where 99% of our target customers are. They understand what a good investment is, but they just don't know that wine is one, and we need to we need to put that in front of them essentially. So a lot of our efforts are on that educational journey.
Nice. And then how are you guys thinking of that? Are you doing a lot of content, via blog or kind of, marketing on social, or?
Yeah, it's really all rooted in our content. So we've got an awesome content team that's writing really great pieces that educate people about the wine world, why these wines go up in value, which ones go up in value, what are things to consider, in terms of storage, in terms of your expectations on returns or expectations on how long you should be holding this wine for, and that has really been the biggest driver of growth. I'd say probably over 75% of our traffic is coming from our blog.
Nice, nice. And yeah, I was actually going to ask about from growth. Like aside from that, do you guys do any any performance marketing right now?
Yeah, so if you've been on our site, you'll probably get targeted with a shit ton of Instagram and Facebook ads right after.
Yeah.
We do performance marketing, Facebook, Instagram. We're starting to dip a little bit into the Google Ads network as well. But still, I'd say most of our traffic is still coming just from organic and direct search as well as referrals.
Nice, nice. And then on the supply side, so as you're kind of building investors, through on the user side or consumers, how are you going about actually kind of procuring the supply?
So it's really the type of, I think, marketplace where if you get a few key suppliers, it's really easy to leverage that into more traction. So, say if the top 3 wineries have already joined us or are working with us, then we can go to others to be like, hey, we're already working with A, B, and C. You should come on board. So, having that traction and having that snowball effect has really helped with us.
Awesome. Yeah, I was curious to see as far as how receptive the industry is to it.
Yeah, I mean they realize that we're helping them with a ton of the problems that they face every day. Providing better transparency, providing access to a larger market is something that I think can just only benefit folks.
Yeah, yeah. Yeah, I mean, you guys, it's really incredible, what you've built and so quickly. Could you maybe speak to the, what that's kind of, taken as far as, from a capital side, some of like your expenses and kind of the team size to get to the point that you're at today?
Yeah, so our team, I'd say we have 8 team members, a couple of contractors as well. And, we really tried to be pretty conservative with our burn. When we were raising, it was in January and February of this year. A lot of people were really scared of the pandemic. A lot of people didn't know how long it would last, and we still don't know how long it's going to last. And I think in terms of our fundraising strategy, we decided to be really conservative with our timeline. So we're like, all right, let's raise for 24 months of runway. We've been able to conserve most of that. And the good thing about our business is that it's not very capital intensive. We're really just operating online. Most of the wine that we have in our warehouses all around the world, the wineries that we work with already house it in the same warehouses. So when we're buying wine from them, it never actually moves. So we've been able to really streamline costs that way. And I think also just from a efficiency and just from an environmental sustainability standpoint, it's also the right thing to do. And that's really what we've been trying to be in terms of just starting our company in just a very unknown time in the world. That's why we wanted to take a little bit more of a conservative approach to our resources.
Yeah, yeah, for sure. So what do you see as kind of, maybe like the next kind of 12 or 24 months, for Vinovest?
For us, I think it's really just the baby stages of the company right now. We've got a few thousand investors, but we see this as something that so many people can relate to and connect with. How many people like investing and making money, right? And how many people also enjoy a nice glass of wine? I think that intersection between someone's passion and someone's profits can be something really powerful, and we want to reach a lot more people that way.
Nice. And then out of curiosity, to kind of like circle back a little bit. So I'm kind of curious as to, some of the other kind of like alternative asset investment platforms, the way that they structure the actual kind of like legal investment instrument that you're investing in. How do you guys kind of structure that? And are there any kind of like regulatory challenges?
Yeah, so that's also a key reason why you own the actual asset. You're not buying some sort of wine fund or some sort of share, because that gets into the world of securities, and that not only from a regulation standpoint is a bit trickier, but also excludes a lot of people. We want anyone to be able to invest in wine because it's literally a bottle of wine. As long as you're drinking age, you should be able to invest in it. So that's really why we wanted to structure that way, and also it helps a lot because wine is eventually going to be consumed. So you can't really sell a share of wine to a Michelin star restaurant or to a wine retailer, right? They're dealing with cases and pallets of wine. We want to deal with the same units that they're used to so that we can tap into that liquidity.
Got it. And then I'm assuming that say for instance, the restaurants, they might actually be the buyers of the wine too.
That's correct. So eventually someone's going to drink it. So it's mostly going to be on that retail side.
Yeah. That's super interesting. And then what about as far as when we get into kind of like, like institutional or kind of like family offices, have you seen any kind of interest from that like already or?
Yeah, we start to see it, especially more and more in the last couple of months. I think, fine wine has been something that it's not new. People have been investing in it for a long time, but it's traditionally been something that has been really only restricted to ultra well connected or ultra specialized investors. And we have brought our expertise and been able to streamline it and package it in a way that is, I think, a lot more appealing to larger institutionals and family offices. So for them to deploy, $500,000, $1 million into the platform, it doesn't take a lot of work for them to do. And that's what we started to also see as well in terms of our demand.
Got it. And then do you, how does that kind of, how do you kind of account for that, like within, the product and within the kind of company? Are you kind of creating a separate, like portal and kind of experience for them for that, or?
Right now, it's all the same product.
Mhm.
All that we give people, I think, is enough to be able to have the right sort of like reporting and accounting standards for any investor. But I'm sure as we grow bigger, or as we focus more on institutionals, we'll start to see different sort of product requirements for those higher level investors.
Yeah. Got it. Cool. So we're actually going to jump into questions right here in a little bit, if that sounds good to you. Before we do, so you have quite a bit of a super interesting experience, with EnvoyNow and then with Vinovest. So are there any kind of like key learnings, since both are marketplaces, that you could share with us?
I'd say with both of those, at least, it's really, really important to have a happy supply side. So I know it's a kind of hotly debated with marketplaces on what to focus on, but um, you know I think for most successful businesses, and for I think also what we've seen in terms of the marketplaces that have gotten really big, it's that supply side retention that's really, really key. Because if people are not willing to sell, and not willing to stay on your platform, that means that you're not creating the right experience for them. And I think that directly impacts the customer experience. Like for EnvoyNow, which was in food delivery, if you don't have enough drivers, the delivery times are going to be lower and longer, and customers are going to be waiting longer. And on Vinovest, if we don't have the right wines, then they're not worth investing in, and people are not going to come to the platform. So it's really, I think, an important flywheel to have on day one, is focusing on that supply side experience.
Got it. Yeah, I think that's great feedback for sure. Actually, I had kind of interested in that myself. I wanted to ask a question briefly. So how, like, when you first started with Vinovest, what did that supply look like?
So for us, like, we saw a lot of places where people are selling wine. So we were able to kind of just bootstrap that supply by taking those listings and acting as a proxy. And that helped us to be able to immediately have the type of supply that would attract customers.
Got it. And what was that kind of like as far as like a certain kind of like, did you kind of create like an ideal kind of portfolio, and that was, you're saying you're pulling it from existing kind of reference points where you could assume that there was a certain amount of demand for it, or?
So I'm not too sure what you're saying, to be honest,
Yeah.
but how we did it was that we saw a lot of sites that were buying and selling wine.
Yeah.
And what we did was we took all of that inventory essentially, and was able to aggregate that on our back end. So this way, when we were making buying and selling recommendations for our customers, we were able to get the full market picture and be able to guarantee them prices that were pretty much the best that they could find. So that's really a part of, I think, providing a good customer experience, is giving them access to the full market. Whereas if they were to do this on their own, it would have been somebody looking through 50 to 60 different websites to kind of pick the best one.
Got it. Yeah, I think that was yeah, I was trying to go down that direction with it. So cool. Tomas?
Well, cool. Anthony, thanks for taking the time to share your experiences. Super, super helpful. And really cool to, be learning more about your journey. Um, One question that I have is, as given your experiences, one of the things that's kind of endemic to marketplaces is this kind of like slow start, kind of like pumping the well to like prime that initial movement. But then once you have like that initial traction, things can really start to move forward with a lot more momentum, and kind of just like, yeah, like direction. And one question I have is, in both of your marketplaces, was there a specific moment that you were like, okay, like our initial traction, like we were able to see enough that it's time to really press the gas right now, and go into full scale mode, and we're ready for that. Like, did you have a kind of any like metrics or any kind of guideposts to help you really gauge when you got to that point and we're ready to transition from product market fit to scale?
Yeah, that's a great question, Tomas. I think for both companies, when we knew we had product market fit was when our sites crashed. So that was, I think, a good indication that, all right, well, right now there are more customers than we can handle right now, and that's happened several times, and that's helped us realize that, like, all right, we've got something that customers want right now that can help us really be able to confidently scale our supply, because we can tell those people, be like, hey, we've got X million dollars this month coming in of capital, and they want to buy wine, and we want to be able to satisfy that demand. So do you want to be a part of our platform? So that's really what we've seen. And there really isn't, I think, a clear-cut light bulb moment, but a lot of times when you look back at it, you can be like, oh shit, that was the time when we really saw that the demand clicked.
Cool, thanks.
Hey, Anthony, so I had a question as far as for EnvoyNow. Was there could you maybe speak to that moment with EnvoyNow when that was the case?
Yeah, I mean, it was just so many students placing deliveries that our delivery drivers were completely overloaded, and me and my co-founders had to be delivery drivers for multiple nights. So that's really when you see like the demand completely overwhelms the supply side. And when we were doing those deliveries, it was crazy, because we could actually tell people that we were trying to recruit to be delivery drivers, be like, hey, like I just did 6-hour deliveries yesterday and I made X amount of dollars. Like, this is, that's as real as it gets in terms of a sales pitch to grow the supply side. And you can tell them that, like, hey, like we, if I didn't do deliveries last night, you did, this is the money you would have made. So I think it's a pretty compelling pitch.
Got it. Nice. Hey, so I actually had a question. Someone sent me in the Slack for that's actually exploring a kind of on-demand marketplace themselves. So the question was about identifying primary markets, because you did mention with EnvoyNow that you were going to like tier 2 markets, I believe, when it was very competitive. So how did you identify those markets, the primary markets, and then expand to the other markets?
Yeah, so for us, like, we went to those markets because that was our niche. We were only for colleges. Our delivery drivers were students. We were delivering only to students. So that was really what we could go into. But obviously there's thousands of colleges in the US. So we looked at the characteristics that made our first couple markets successful. So, they were just large schools, high percentage of local/commuter students. So that means they had cars and, mopeds and things like that to be able to get around. And usually those state schools have a really large student body. It's not like a liberal arts college in the middle of nowhere that has no restaurants. It's like a big school like Penn State that has like 100,000 students and has a ton of restaurants and things around there. So we were able to just see the characteristics of what worked for us. And, thankfully, our initial market that we started at was that sort of prototype. So we just kind of copied that, and we're able to get demographical data on all the colleges in the US, student body size, number of restaurants within a certain mileage, and then we could just stack rank which ones were the best for us. But at the end of the day, it's much more of an art than a science, because it's really about who's leading those markets as well, especially for something that's offline like food delivery. You could have the perfect market but the wrong hire, and that market's still going to fail. So that's also another key aspect.
Got it. And then did you have like city leads, like launch leads for that?
Yeah, we did. So we had sort of like general managers of each market, and it really did make a difference.
Yeah, nice. So it sounds like you've been fortunate to build some pretty great teams. So maybe, could you maybe speak to, how you've been able to do that, and maybe some kind of hiring tips?
Yeah, so I think a lot of our hiring on both companies has been purely inbound. So if you see someone who's passionate about your product, that maybe they've tried to build it themselves, or they are actively seeking you out, that's always, I think, a good sign. And I think for us, it's just being able to really effectively also communicate our vision and our excitement, to be able to see people who have that big vision, right? Because especially in the early stage, things are going to be hard. Nothing's going to be perfect. There's no established 1, 2, 3 playbook to success. So you want people who are going to be comfortable with being in environments with a lot of uncertainty, comfortable with failure, a lot of it, and pretty much have that same mindset that you would have as a founder, and act like as an owner. Because especially with offline marketplaces where there are market leaders, that's essentially what they are, right? They own that market. You're hiring them because they know more about that market than you do, and that's something that I think takes a lot of trust too.
That's a great point. Yeah, thanks for sharing more on that. And then let's see. Actually, here we go. Gordon, did you want to come on?
Can you hear me?
Yep.
Yeah.
Yeah, we got you.
So sorry about that. Sorry about the delay. And so a quick question, Anthony. This is excellent, by the way. In terms of things like fractional ownership, does that even work, or is there any? Is there a way that you can have? You can potentially move, I don't know what your ideal demographic is, but potentially move down market, have fractional ownership of bottles and things like that. Does that make any sense?
I think it does, eventually, which is why I think a lot of these other alternative asset platforms are going to be starting with that, with real estate and such, because, with those prices being so high, right? Like a building's $10 million, or a piece of art is $50 million maybe, that it needs to be fractional. For wine, at least, the price points comparatively are relatively a bit more accessible. I'm sure, you've got bottles of wine that are worth tens of thousands of dollars, but also ones that are worth hundreds of dollars. So it's not needed, but if you want to fully open up that market and, allow people to buy a share of wine for $10, I think that's the eventual way that the market will go if it's successful.
I mean, obviously, you mentioned earlier, you're able to drink your investment, but doesn't work quite so well if it's fractional. I guess you probably could have some shared drinking experience. I don't know your thoughts on that.
Spot on, right? You can't really. Same with the ownership over real estate or art, right? You can't really live in 1/10 of a home, or share the art with someone else. So I think that's something that you lose out on, in terms of the experience of owning the asset, but that's a trade-off I think for the convenience as well.
Great, thanks. I'll mute myself again.
Awesome. Cool. And hey, Max, did you want to come on?
Yeah, thanks. I have a question about who decides the prices in the wine market. Do you have like special advisors, or how do prices develop? Who values these assets?
Yeah, so it's really just based on the market. So there's already, people who are buying and selling wine every day, and they've got bids and offers out. So we don't really set a price. We just reflect what other people are looking to buy and sell, and connect them with each other.
Okay, do you like where do you find these? Are they on your platform? Are these people bidding on your platform, or did you integrate in some other platform or marketplace?
Yeah, so they're all integrated. So there's tens, even hundreds of these sorts of sites that are, very regional, or maybe they only sell certain types of wines or wines for a certain demographic. So there's a lot of, there's a lot of very fragmented mini marketplaces that are going on in the wine market. And for us, our kind of like stage one is to at least connect all these players together. So really integrating that with our technology and our platform.
Nice. Thanks.
Cool. Hey, Anthony, so we're going to wrap it up here in a little bit because we're running out of time, but I did have a question for you that I would love if you can share a little bit more about, and that is the kind of, fundraising journey for Vinovest and what that was like for you.
Yeah, so we raised some funding earlier this year, raised the seed round, and I think something that we're very fortunate to have is have both me and my co-founder be repeat entrepreneurs who have raised funding before. So step one was just to reach out to all of our existing investors. They had a good experience with us. They backed us before. They made money with us before, and that was really key for us to be able to get those initial lead investors in. And the first check is always the hardest. No one wants to be the first money in, and especially when things were, I think, pretty crazy with the lockdown, the pandemic, and the market crashing at, in the middle of February. There's a ton of uncertainty, and I wasn't able to, travel as much as I wanted to for, to do my fundraising. So having those existing investors be able to make warm intros and be able to do things from Zoom, which at the time was very unfamiliar, but now it's like what everybody does and what everyone's used to. I definitely consider myself pretty lucky with the timing of everything to get it wrapped up before things went full lockdown.
Yeah, for sure. Yeah, thanks. Yeah, this is a super great chat. I mean, I feel like we need to get a recommendation in from you, or, what's your favorite wine that you guys have, or, personal?
There we go. That's what everyone's actually here for, right?
Yeah, right.
Wine recommendations. So red wines, I'd say like my favorite type of red wine is Syrah. So I think, wines from the Northern Rhone, they make really, really amazing Syrah. I think goes well with a ton of different food, whether you're grilling out on the barbecue or you're having something a little bit more refined. And in the U.S. as well, regions like Paso Robles and Santa Barbara County make some really good local Syrahs as well. And then in terms of white wine, I'm a big fan of Chardonnay from Burgundy. So compared to American Chardonnay, it's usually a little bit more crisp, a little bit more friendly with food, not like too overpowering. And these Chardonnays from Burgundy can range from something as accessible as $20 to the most expensive Burgundy Chardonnays are $6,000, $8,000 a bottle. So there's a pretty incredible range there, and I think everybody can can find something that they're happy with that wine in that region.
Awesome. Yeah, thanks for sharing more on that. So definitely going to take notes. So, well, cool. So last but not least, where can we keep up with you? Time for a little plug.
Yeah, so I try to be pretty accessible. So whether you add me on LinkedIn or on Twitter, check that fairly often. And then if you wanted to come take a look at our website and see if wine investing is right for you, our URL is vinovest.co.
Awesome. Thanks. Cool. Well, thanks again. This is a really great chat. So thanks for joining us, Anthony.
Really appreciate everybody, and thanks for giving me the opportunity. I appreciate it.